And now we take a look at mergers and acquisitions in Africa, of course, beginning with a summary of how it looks like in 2025. Now, we can tell you that records show that in 2025, mergers and acquisition, there were more activities around it, more the volume of transactions was more, but the value of those transactions, however, reduced. So in the first 9 months of 2025, we saw that total value was at 6.85%. That's a 6% decline from what it was in 2024. So year on year, there was a decline in the value. Now, the deal volume was at 259 deals across the continent. But SA is still leading, which is why SA has been excluded from that. And when we look at it by regions, geographic leaders, West Africa led by Nigeria. Nigeria had 45 deals of that. North Africa was led by Egypt. They had 43 deals. East Africa, led by Kenya, the most popular names you would say, they had 37 deals, and South Africa remains, even up to now, the most active single market, accounting for 30% of the volume on the continent. So Nigeria, Egypt, Kenya, they still have a whole lot to learn from South Africa, because South Africa alone gathered 30% of this last year. And I think one of the most interesting sectors when it comes to mergers and acquisition is the banking and finance. So in 2025, the region had over $537 million spent on regional expansion. And then the first round in South Africa acquired a 20% stake in UAE-based Optasia for $279 million. Access Bank was very active in the mergers and acquisition space last year. That's in Nigeria. They continued their aggressive expansion, acquiring National Bank of Kenya for $109.6 million. So it was very active, even though we saw a drop in volume compared to the year before. But let's get more explanation on this and understanding of it as we have our guest, Chukwuma Christian Udoije, who is a financial expert, joining us for this. Hi, Chukwuma. Good afternoon and welcome to the program.
Good afternoon. It's a pleasure to be here today. Thank you, Edie.
Yeah, so should we be worried? We saw that there was higher volume of transactions when it comes to mergers and acquisition, but the value was lower compared to the previous year.
I think rather than being worried, it's a good sign, because it means there has been a rebound compared to previous years. You need to understand that this year was a bit unique, given the macro movements, including US tariffs and political factors. What has happened is the rebound has started, but at first we are seeing a movement in quantity, and then over time we'll begin to see movement in quality.
So we saw the financial sector was, loud last year, but what other sectors were of interest or had a lot of transactions last year?
Definitely, the finance sector is always one of the loud players, but we have seen movements in AI, we have seen movement in tech, we've seen movements in data, and as usual, there's usually lots of movement when it comes to real infrastructure, energy, and related industries.
And if we were to, go by the activities of 2025, what do you see? Global capital flows, deal appetite, the trend for 2026?
From 2024, there was a lot of dry powder, especially with private equity. We had a lot of private equity players holding so much funds and trying to offload the portfolio that they had. But what happened with 2025 is we expected a lot of movements, but the expectations was that this movement would also come with more numbers in terms of the deals. But the US tariffs kind of threw the market off, and there has been a lot of wait and see. What I'm expecting is that from 2026, we'll probably see a bit more confidence in terms of the way companies challenge M&A deals.
I wonder if we can expect more confidence because President Trump is at it again. I know you've heard of his latest threats, the tariff threat for Iran, for 8 European countries, and of course that will obviously connect to African continent.
Definitely, but with African companies, what we have seen is the African market when it comes to finance sectors has always been more robust because many times this is based on AI backbone, and once the AI systems exist, even if we do not have as much infrastructure to support much more solid manufacturing sectors, business activities can happen in the finance sector. So this is a bit of an outlier. But I think generally, if you look at African markets, especially Nigeria, over the last year, we have done pretty well because many of the major deals involved local players, which is something we need to give ourselves a pat on the back for.
Mm. So I guess public policy is in the right direction and should lead us to a better place in 2026. Talking about Nigeria now.
Yes, talking about Nigeria, I mean, I think there have been a lot of, I think I'll summarize the movements we've seen in Nigeria in three parts. We have regulatory impact, like you said, things like recapitalization in the insurance sector, in the banking industry. And then, of course, we have, as usual, this is a global trend, digitalization and fintech movement. And then we have other parts which is more driven by the private sector, which is strategic consolidations. This is where we've seen companies changing their portfolio, and that is the more interesting part. And we've seen lots of movements of funds in that area.
All right. Thank you so much, Chukuma Christian Udoije, financial expert, for sharing those thoughts with us.
Thank you very much. Great pleasure.